Investors, they seem to be looking past one other results here as well that we've been tracking. United Airlines. United's net loss in the first quarter is what investors are looking past as the company touts a strong summer season ahead with its profit guidance well above what the street was expecting. CEO Scott Kirby reiterated the expected Q2 turnaround in a statement saying that we are watching the macroeconomic risks carefully, but demand remains strong, especially internationally, where we are growing at twice the domestic rate here. As we've been continuing to keep a close eye on broader airline shares as well, it's worth noting that this is a period, and I brought this up when Delta reported, TSA passenger volumes, they had really supported some of the performances that we had seen from the airlines over the quarter, at least would support them doing better than expected, because this was the first quarter where you saw TSA passenger volumes average above the pre-pandemic markers for the full quarter. So all of that considered, there are a lot of tailwinds on the demand side that we're hearing about from the airlines. It's just a matter of, okay, where does the service remain intact? Where do customers continue to take price on, even as capacity is still continuing to ramp back for companies like Delta, like United, like American Airlines?
Yeah, and it's about the cost line and the bottom line, right? I think that we know demand is intact, right? Mm-hmm. And as he said, international demand in particular is intact. It's really what is going to be happening with cost. The capacity constraint seems to be holding, right? In part because the government is leaning on these airlines to hold capacity. But, you know, there are still costs that are going higher. Average fuel costs, as you can see there, are a factor. And so I think that's something that investors are going to continue to pay attention to, as well as some of these other issues here, the staffing shortages in particular. Yeah,
we actually had Delta CEO Ed Bastian comment on some of the broader issues around airlines right now, and especially when it regards demand. Here's what he had to say.
I think we all agree, as does the FAA, as does the Secretary of Transportation, the need to continue to modernize the tools and the capabilities of the air traffic controllers. And we also need to increase the staffing levels of the air traffic controllers and the throughput in terms of taking new controllers and having them become experience ready and into those chairs. What it requires is funding on a multi-year basis and the support in Congress to be able to give the FAA the resources they need over a longer period of time than what the annual budget cycle currently allow to embark on a large modernization journey.
And so even as we're thinking about what demand could look like going into the summer, it's still going to rely on the infrastructure from a regulatory perspective still holding up with all of the output that the airlines are seeing and forecasting based on bookings that they've seen already come through right now. And that's a little bit of what he was talking about, trying to get past the issues that they've run into with the FAA, everything into air traffic control, even into some of the individual airlines and how they're able to just continue to operate. Southwest had their own issue earlier this week, albeit brief, related, after the holiday travel season as well.
Yeah, so something to keep an eye on.